Stocks on Wall Street closed Friday's trading session mixed as key consumer inflation report that came in slightly lighter than expected failed to spark the substantial rally. Dow gained nearly 50 points while Nasdaq loses 50. Markets in Asia opened lower, tracking cues from Wall Street. The GIFT Nifty is indicating a positive start for the Indian market. Crude prices record their first back-to-back weekly decline this year as investors await a second round of US-Iran talks likely on Tuesday. Meanwhile, gold rises towards $5,030 per ounce, extending its rebound and powering weekly losses as softer than expected US inflation eased pressure on Treasury yields and weighed on the dollar. The Reserve Bank of India finalizes rules for banks to finance mergers and acquisitions. All owes banks or to undertake acquisition, financing and long-standing demand from the banking and corporate sector. The central bank has also revised rules governing loans against securities, which means banks can lend against shares, mutual funds, ETFs and REITs with differentiated loan to value caps. Hello, good morning. You've tuned into CNBC TV18. You're watching Power Breakfast with me, Vinny Mutiwala. Thank you so much, as always, for tuning in. And in terms of the markets that we're keeping an eye out on, US was a bit of a mixed trading session, not much of an up move or down move that we saw coming in on Friday. While down saw some bit of a gain and loss, was a flip-flop between the Dow as well as the Nasdaq. Now, what we're keeping an eye out on today in terms of the Asian markets, yes, there is the Lunar New Year, so we have a Taiwan index that's shut, but the other indices which are open, we're seeing some bit of a negative move there as well, except for ASX 200, which is managing to hold on to a slight bit of a gain of 0.1%. We're seeing COSPI, we're seeing Nikkei, all of them trading with cuts. Let's look at the Nifty implied open, where that indication is coming in for the Indian markets. Actually, it's a down tick that we're seeing coming in of 96 points in the trading session that we're watching out for. So let's keep an eye out on that. A bit of a red start again is what we're watching out for from the Indian markets. But a lot of overnight cues that have come in, a lot of commentary that has come in globally as well. How is that going to be impacting our Indian markets? We have a team of research here to set you up for trade, tell you which are the important stocks to watch out for in the trading session as well. first up, let's go across to Gaurav, who's here to tell us the important cues in the market that we're keeping an eye on. Good morning, Gaurav.
Well, good morning. If you look at Nifty, it wasn't a good day if we consider last week or in fact the last day itself, because Nifty declined almost by 1.3%, and the top losers were Hindalco, Eternal, HUL and Adani Enterprises along with others. In fact, only 6 out of 50 constituents were in green at the end of Friday's session. But now what option data suggests is that there is going to be some pressure on the upside itself, because 25,500 to 25,600 is the level where resistance will be there, while on the downside 25,300 is somewhere we may find a near-term support. Apart from that, if you look at the sector-wise performance also, it wasn't a good scene. In fact, all the sectoral indices were down. If we look at Nifty Metals, it was down more than 3%, while Nifty Realty and Nifty Energy was down more than 2%. And if you look at the FIR-DIR data as well, it suggests that the FIR were net sellers. They sold worth more than 7,000 crores worth of equity in cash. Now, what to expect? When we look at today, we have got public holiday at many of the exchanges across the globe, like China, Taiwan and USA. We also have early closure at Hong Kong and Singapore. So we will be seeing any cues from there. But apart from that, let's also not forget about it will be a day when Japan will introduce its 2025 growth estimates. So let's see how the number comes, because that number can actually be an important trigger for economic environment across the globe. Other than that, from the Indian market, we have results like NBCC, Torrent Pharma, KFintech, Ola Electric. All of these companies reported their results over the weekend. So let's see how these companies perform. And at the same time, we will be getting the WPI data. So let's watch out for that as well. And today, it will be a day when AI Impact Summit will begin. So let's see how it will also impact market and specifically the IT stocks in the days going ahead.
Okay, Gaurav, thank you so much for that. But let's go across to Ria, who's here to tell us which are the important stocks that you should be keeping on your radar. Good morning, Ria.
Well, good morning. The first stock to watch out for today is Malappuram Finance. They have received a conditional nod from RBI for Bain Capital's proposed acquisition of up to 41.66% stake in the company. So this stock will be in focus on the back of that news flow. There are also a lot of companies reporting their Q3 numbers over the weekend. The first one is Ola Electric, reporting a net loss of roughly 487 crores versus a loss of 564 crores in Q3 of last year. Revenue has also declined by roughly 55% for the company. For NBCC, the net profit has seen an increase of almost 40%, and even the revenue has gone up by roughly 8% on a year-on-year basis. For Inox Wind, revenue has gone up by 32%, and margins have come in slightly stable at 23.3% in this quarter. For IRB Infra, revenue has seen a decline of roughly 8% compared to Q3 of last year, but margins have expanded to 54.6% in this quarter versus just 48.6% in Q3 of last year. Moving on to Torrent Pharma, the net profit has seen an increase of roughly 26% on a year-on-year basis, and revenue has also gone up by almost 18%. For Tilak Nagar Industries, revenue has seen a whopping increase of 80% compared to the previous year. Margins have remained flat at 8% for the company. For KFin Tech, net profit has gone up by roughly 2%. Revenue also seeing an increase of almost 28% on a year-on-year basis. For Fortis Health as well, good numbers here. Revenue seeing an increase of roughly 17.5%. Margins have also expanded to 22% in this quarter. For GMR Airports as well, revenue has jumped up by 50% on a year-on-year basis. In fact, in the month of Jan as well, the passenger traffic has gone up by almost 4% on a year-on-year basis for the company. Apart from this, Hindustan Copper will also be in focus today. The Jharkhand government has demanded a compensation of roughly 930 crores from the company. And apart from this, a lot of pharma stocks will also be in focus today. The first one is Aurobindo Pharma. The US FDA has approved an ointment by the arm of the company called Acrotech Biopharma. And Natco Pharma will also be in focus today. They have received an approval from the CDSCO for semaglutide in India.
Okay, thank you so much for that, Ria. But let's go across now to Sudarshan, who's here to tell us which are the important cues in the world of F&O. Good morning, Sudarshan. Last week, that IT sell-off continued. We saw markets seeing a very dull week as well. This week, what are we keeping an eye out on, and specifically today?
Good morning, Vinny. So, two key questions. Will it be a happy Monday? We too celebrate India's win against Pakistan and we see recovery in the market, or market will be clouded by Monday blues. And if you take a look at the data, both the possibilities can happen today because FIs remain aggressive and they continue to be on the call side. We are seeing aggressive call writing in the range of 25,500 to 25,800. But if there is one silver lining, that is the put call ratio of Nifty, which has slipped further. And now we are in the oversold zone. So PCR on Friday had slipped to 0.65 from the earlier level of 0.82. So when PCR is in the range of 0.60 to 0.70, we say it's in the oversold zone. And from that level, there is a probability of recovery. Now coming to the FI's figure. In the index futures, they have sold more than 2,400 crore. In the stock futures too, they have sold more than 3,200 crore. They have reduced long positions by more than 5,700 contracts. They have added short positions by more than 8,500 contracts. And now look at the options data. On the put side, 25,300 and 25,000. These two put options were the most active ones where premium has moved higher. While on the call side, 25,600 and 25,500, even if you look at 25,800 call options, for all these call options, premium has taken a sharp knock down. That's a support for Nifty, 25,300. That's the 200-day moving average. And resistance would be 25,800. That's 50-day moving average. Two stocks remain in the band, SAIL and Sammaan Capital. Some of the stocks that have seen big change in underlying as well in the open interest. Coforge, it was down 4%, but if you take a look in the open interest, it was up 25%. Muthoot Finance down 12%, then open interest 12% higher. iShares up 1.5% in the open interest, down 4%, and Bajaj Finance plus 2% in the open interest, down 5%. So keep an eye on these stocks may be in the focus on the back of big changes in the OI.
Okay, Sudarshan, thank you so much for that. Now we're going to keep an eye out on whether the market is steering that India-Pakistan win or Monday blues. We'll talk about that later through the day as well. Thanks so much for that, Sudarshan. But on that note, let's move on. And RBI has amended its norms for exposure of bank to capital market. What are the changes that have come in and announced? Ritu is joining in with us for that detail. Ritu?
have the Reserve Bank of India coming out with these much-awaited capital market financing norms after they gathered the comments on the draft circular, which was released in October last year. And these really paved the way for the banking sector to start M&A financing for the very first time. It's been a long-standing ask. Now, under the new framework, banks can finance acquisitions up to 75% of the deal value, with the acquiring company required to bring in at least 25% equity from its own funds. The acquisition finance will be available only to companies with a minimum net worth of 500 crore rupees. Listed acquirers must also show profits in the last 3 consecutive years, while unlisted companies will need a BBB minus or higher credit rating. Now, the acquisition, RBI says, should also result in control within a 12-month span, and post-acquisition consolidated debt to equity is capped at 3:1. Now, there's also a mandatory corporate guarantee from the acquiring entity on the group that will be required. Now, apart from this, RBI has also overhauled the capital market lending norms, so banks can lend against shares, mutual funds, ETFs, REITs, InvITs, but loans against listed shares and convertible debt, that is capped at 60% LTV, mutual funds and ETFs at 75%, debt mutual funds at 85%. Retail loans against eligible securities are also capped at 1 crore per individual. Funding for IPOs, FPOs, ESOP subscriptions, that's also allowed up to 25 lakh rupees, which is in line with what the draft had said, with a minimum 25% margin. Now, at the system level, RBI has capped the aggregate capital market exposure at 40% of the eligible capital, with a direct exposure being capped at 20%, which is almost double of what was announced in the draft, and acquisition finance at 20% within the CME limit. Banks will also have to set board-approved intraday exposure limits, and at the same time, investments in LIC, NPCI, NSE, BSE, etc., these are going to be exempt from the total exposure CME norms. The new rules, have been announced now, but they come into effect from the new financial year.
Thank you so much for that, Ritu. But let's move on. The AI Impact Summit kicks off today. CNBC TV18 will give you a front row seat to the mega event as top global CEOs and policymakers arrive in New Delhi. Throughout the week, we will bring you special programming from the summit as we track the growth of AI and its implications for the economy at large. On that note, we're going to slip into a very short break. We will get you cues from the Wall Street on the other side. Welcome back to Power Breakfast on CNBC TV18. Now, the U.S. market ended mixed on Friday after a muted January inflation print of 2.4%. The S&P 500 finished the session near the flat line. The Dow was up 0.1%, while the Nasdaq fell 0.2%. For the week, major indices all posted declines, with the S&P 500 sliding 1.4%, posting the second consecutive losing week. The Dow dropped 1.2% for the week, while the Nasdaq notched a 2.1% decline. In fact, we have CNBC's Steve Leesman, who's joining us now to give us a roundup on the January inflation data.
Really good numbers on the inflation, but dig a little deeper, and there's still some concern. Take a look. 0.2 on the headline, 0.3 was the estimate. So that's the big beat right there. That caused that year over year, which is something the Fed watches, and some of this stuff will feed into the Fed's PCE report. 2.4 versus 2.5. On the core numbers, pretty much as expected, 0.3 versus 0.3, and 2.5 year over year versus 2.5. But let's look at the trend here, and it has been down. You can see coming down the way it is, 2.5%. Had been as high as 2.7, almost 3%. Digging into the numbers, the big surprise coming in housing. Those numbers have been coming down. We've been hearing anecdotally. They haven't necessarily been captured in the CPI. Goods is another big number here. That's where we're trying to capture the tariff impact. We're going to get into that in more detail in just a second. But gasoline, a big factor, down 3.2%, along with used cars and trucks. Phil LeBeau telling me that's something of a one-off, perhaps, relative to some timing and when the prices are good. But Joe Buswella says once one digs beneath the the headline, one can observe a notable turn of the year price increases in goods sensitive to tariffs and services. Take a look. Appliances, one of those areas where you would have a tariff effect. Also tools, you can see over here, 0.8%. Services overall, the Fed watching this, a little bit sticky right there. And airline fares, they've been doing a good job keeping those seats down and airlines up.
Now, the U.S. economy experienced almost zero jobs growth in 2025, according to the revised federal data. But hiring has picked up in 2026. Here's what U.S. Treasury Secretary Scott Bessent had to say. Listen in.
What was even more impressive about the numbers is the private sector numbers were more than 170,000, and government jobs were reduced by more than 40,000. More than 30,000 of that was federal jobs. We're at the lowest ratio of government jobs to total jobs since 1966. And this is part of President Trump's plan to reprivatize our economy. And I think, as I've said many times, 2025 is about setting the table. 2026 is going to be a banquet for the American people. The economy is taking off. We saw 40,000 new construction jobs. Everyone says to me, oh, where are these factory jobs that you planned? And unlike what you and I see in the financial markets, you can't push a button and build a factory.
Now, getting you the latest on Trump-related developments, moving on to the first commentary, U.S. President Donald Trump said member states of the newly formed Board of Peace have pledged more than $5 billion for humanitarian as well as reconstruction efforts in Gaza and ahead of the first group's formal meeting in Washington this week. In a post on Truth Social on Sunday, Trump said that funding commitment would be announced at the gathering on Thursday in the U.S. Capitol. Now, moving on to the next commentary, Trump also said that he plans to become the first sitting U.S. president to visit Venezuela in nearly 3 decades. An interesting meeting at such times, given the commentary that comes in on the oil front as well. Now, while speaking to reporters, the president also said on talks of Iran, what did he say? That Iran should give United States the right to deal to avoid any further attack over there. He further added that the regime change in Iran would be the best thing that could happen. Now, separately, according to Reuters report, the United States is weighing the possibility of a prolonged military campaign against Iran if President Donald Trump authorizes the U.S. use of force there. Reports also suggest that Trump told Israeli Prime Minister Netanyahu that he would support Israeli strikes on Iran's ballistic missile program if no deal is reached there. So important updates there coming in. On Russia-Ukraine front also, President Trump said that Russia wants a deal and Ukrainian President Zelensky should get moving on. Otherwise, this they would miss the opportunity to make the deal to end the war. So that's the latest that we have in terms of commentary coming in from President Donald Trump with the latest update there. But we're going to step into a very short break and come back with cues in the world of commodities on the other side. Stay tuned in. Welcome back to Power Breakfast on CNBC TV18. Now let's move on and get to the latest update in the world of commodities with Manisha joining in with us this morning again. Manisha, good morning. And what are we keeping an eye out on today for the commodities, gold, silver, oil? What's exciting?
Well, we're looking at the gold prices, which are holding above $5,000 an ounce. It has to be about the softer than expected U.S. inflation data that came in on Friday that has taken the dollar index off its recent highs, with markets believing that you could be looking at 2 to even 3 rate cuts from U.S. coming in this year. While this data this week also has opened with a lot of data expectations, you have the FOMC meeting minutes, the US GDP estimates as well coming in this week itself. Interestingly, when it comes to gold, it's trading in discount after a lot of months in India and the Chinese markets as well. At these prices, there are lesser buyers, and that's what's led to this discount coming in. The crude oil prices also have seen a bit of a decline. This is after U.S. and Iran will resume conversation on Tuesday. In the meanwhile, you also have a statement from OPEC saying that they will resume supply hikes from the month of April. IEA says that there are supply surpluses that you could be looking at in 2026 as well. So some pressure is what we've started the new week in sense of crude for.
Okay, Manisha, thank you so much for that. Crude is something that we will watch out for through the day as well. But India has beaten Pakistan by a commanding 61 runs in their match anticipated ICICI Men's T20 World Cup clash. Now, India posted a strong 175 for 7 powered by a blistering 77 of 40 balls by Ishan Kishan. And then bowling attack did the rest, bowling out Pakistan at 114 to seal the memorable victory. With this emphatic win, the men in blue qualify for the Super 8 stage as well. Now, on that note, we're absolutely out of time on this edition of Power Breakfast. Thank you so much for tuning in. Up next, your Bazaar Morning Call.